John Chachas is with us. He's the founder and managing partner of Methuselah Capital Advisors and also the former co-head of Lazard's global media practice. How did you think, I mean, you know, he clearly disappointed Wall Street.
Well, the numbers disappoint a little bit. The costs are clearly higher.
But Larry Page, I'm talking about.
The performance. He's a new executive in the light, hasn't had to take that role speaking to people who really want to talk to him. And it's an uncomfortable spot. I think over time, give the guy a little time. People come into their own, but it wasn't a great first act, that's for sure.
Well, John, I was going to say this was not his quarter, so to speak, right?
Yeah.
He formally took the helm just a couple of weeks ago.
That's
so
right.
Again, he's speaking as the newly installed head. But how much of an impact did he have on the overall operations, even when Schmidt was running the day-to-day ops, so to speak, as CEO?
These guys are extraordinarily important to the company, and you're right. He stepped in at a quarter that had already sort of, the numbers were baked and done. The vision that these fellows bring to the business can't be understated, and I think he's had a great deal to do with what he wants to set as the agenda going forward. As you know now, bonuses are tied to this success quotient in social media. People are going to...
I have a question about that, because almost everyone we talk to in Silicon Valley, they say, you know what, decisions are being made quicker. That was a big problem at Google. Things are happening better. But he ties it to social media, and then when they ask about what does success in social media mean during the call, Patrick Pichette, the CFO, says, well, you know, that's an internal thing. We're not really going to answer. So what do investors think about that?
Well, I think investors have a hard time with things that aren't quantifiable to a number. Tell me what the estimate's going to be. Tell me how high revenues are going to go. Where is EBITDA going to be? And there are things changing so rapidly in the digital market. And I think Larry Page, Sergey Brin, and Eric Schmidt look forward to those changes and are trying to position the company in a way that can make it competitive. If you look at what it's done with Android, it's quite remarkable, actually. It's taken this operating system and now controls a third and has larger market share in those handsets than the software that Apple has.
John, Betty, well, these guys, that's what I'm saying. So much attention over the last 2 or 3 quarters on these conference calls has been paid to the non-search related activities. Right. But how is Google doing that? I mean, are they monetizing Android? Are they doing anything that makes them money outside of search?
But the contrary argument might be, they see that the users in the world, people are accessing, it's an advertising company, and you're going to access that advertising through this handset device. It's in your hand. They want to make sure that they are in control of the operating system on these devices, and so they have accomplished that in a very short order. They've taken a very large market share worldwide.
John, do you think, though, that they're getting the return that they need on their investments? I mean, I know it's a general question, but are they getting the return?
You know, if you're not moving up, you're moving down in the digital world. So you have to actually, there's no middle. And I think what they're doing is making a bet that by having a substantial presence in the handset marketplace, they are now going to have computers, they have search browsers in Chrome, they are going to be in lots of places, but fundamentally they have to protect this core business, which is their search and advertising business.
Looking through the different kind of divisions, YouTube revenues up 100% year on year. You take a look at local search, you didn't really talk about it, but they did talk about mobile search up 500% in the last 2 years. Which area do you think is going to be the most important going forward in being able to stay competitive and grow those revenues outside of search?
Look at where they're making their money. I mean, they make their money on search.
Clearly, but people are searching differently now.
Well, they are. And you look at Bing's numbers, for example, that are now topping 30% of the market share. They are at 64 or 65. I can't remember the total. But that is an enormous market share. If you protect that and you make it more profitable and you create the legs to protect it over a long period of time, which is, I think, what all these investments are about. These are not guys who invest for a quarter. They invest for 5 years.
But how much is that protection going to come under that regulatory scrutiny that we're talking about right now?
Well, there is an enormous vertically powerful company here. You could say the same thing about Facebook. Huge vertical power. At some point, do we think that people in Washington or elsewhere start to pick on them? Recently, in their transaction to buy a travel site in ITA, they had to make accommodations. The bigger you get, somebody's going to start picking on you for having those strengths. But I think they clearly recognize that.
I just want to switch gears for a moment because I want to talk to you about Myspace, since I know you've done a lot of M&A, in your career. News Corp out pitching, the Myspace, and I was looking at the numbers. I mean, $900 million in revenue, I think back. I mean, Chris, correct me if I'm wrong. Back in 2008. Now we're talking about $150 million in revenue. Can they even sell this company?
I think they can sell the company. They may not sell it for a number that makes Mr. Murdoch happy and that doesn't look particularly good in terms of what they win in and where they come out. But they'll find a buyer for this business. I mean, remember something: 30 or 40 million users. We laugh at it in the digital world because it seems so small. In any other industry, it's a big business. It's a real business. I think what Myspace's recent numbers certainly suggest is what I said before. If you're not moving up, you're moving down, and you can't sit still.
John, I was talking to the guy that used to run the international division at Myspace, who's now starting his own startup. And of course, the big question for him as a startup owner is trying to get talent. When you have a company that's lost so much revenue that a lot of people see going down, how do you keep and attract that talent?
You know, the digital economy in particular is really driven by momentum. And if you have the sense of momentum, you attract the best people. The buzz is there, and it's the impact of a network. The more friends you have there, the more time they're spending there, and it's viral. It just sort of feeds on itself. It's self-sustaining. And when the other happens, and it goes in the other direction, it is equally powerful. It's like physics. It goes in both directions. And I think you're right. I think one of the big questions is when you try to turn a company like this and create or recreate your momentum, what does it take to do that? But do I think it'll be able to be sold? It'll be sold.
John, thank you.
Nice seeing you.
First off, great to see you again. John Chachas, the founder and managing partner at Methuselah Capital Advisors, and also the former co-head of media at Lazard.